All right, welcome back. We are ready to start segment 3 of the 2021 FCA Grain Outlook. A look ahead, Matt. I'll turn things over to you once again and let you lead.
All right, Wayne, thanks. This is going to be a section we'll kind of look at the new crop supply and demand, but I have a few things I didn't know where it would fit. With the first part being a look back, the second part being global. I do want to talk about this because it does have an impact on looking ahead too. Corn use for ethanol. I think it's an important chart to look at. Obviously to me, COVID had the biggest impact on gas demand, and there's still a lot of uncertainty on what this looks like going forward. However, what I want to point out is from '05 to 2010, we were adding about 500,000,000 bushels of corn demand per year to the balance sheet. Since then, obviously this has been kind of capped out. Now, what's a struggle is that where we peaked about 5.6 billion bushels of corn consumed for ethanol versus where we are projected into the 5 billion bushel today, that's a big 600 million bushel that we could see come and go. And I think that to me, we're not going to see it go away. We're not going to see ethanol go away. But I think that there's some concern as a work from home environment becomes more of a commonplace. And frankly, I just think that's going to be a long-term serious solution. I just think that's something that we're going to see in a lot of different major cities across the U.S. Office space is cheap. You're seeing it, just people are putting infrastructure in home offices. I think that that's going to be a real thing. I think the electronic vehicle fleet is a real thing. And I think that that's something that just kind of keeps upward pressure on this market. We've seen for the last few years with ethanol that we're producing over our domestic blend wall level of demand. So the solution to that is really going to have to be an export market. Could it be China? Very easily could be China as that pathway forward if they were to come to the US, because they've got initiatives of trying to get their own ethanol fleet ramped up. I don't think that's going quite as fast as they want, so they might come back to the US for something like that.
Matt, I do remember, I want to say it was maybe 2, possibly 3 years ago in our Outlook meetings, Chinese ethanol intentions were a topic that we talked about. And yeah, they had a very aggressive schedule set to ramp up their clean air efforts, if you will. And ethanol was a major part of that. And the question was, all right, do they get there through building their own plants and making their own ethanol, making them a larger corn importer in order to do that? Or do they just simply import the ethanol itself?
Exactly. And I think that this discussion gets pushed back as corn prices there are in the $8 to $9 a bushel range. I don't think they're quite as excited about either side of either prospect of either importing ethanol to that level or producing ethanol with their own corn supplies. But to your point, Wayne, I think that they do have an emissions. I know it doesn't. That's not a real Chinese way of thinking about things, but I think they are cognizant of moving forward with some emissions controls, and I think ethanol is a big part of that. So it could be one of two ways. It's either U.S. ethanol or it's corn, and in either case, it's probably a supportive corn story. So that's an important thing. And I just want to, this just shows kind of where gasoline consumption has been over the last. This is the top line would be kind of the normal look. This last year was the COVID look. We've actually, I think it's been a surprise at just how. I think by this time we expected to be far closer to normal, and we're still running 8-9% below normal. My gut feel is that we are going to have a sugar rush very soon. We're starting to see some opening of states. I know it's subtle, but it's big to me. I think the Texas Rangers indicated they're going to open up their stadium for fans 100% this summer. I'm not a Rangers fan, but I'm a sports fan, and I think that's a good sign of things to come. I just think that there's going to be some pent up driving, and I would say we'll see probably an active driving season this year. Um, we've also seen production. I'm going to reference this as ethanol production, and you saw this big spike down. It's fascinating. It really is fascinating. So this just happened 2 weeks ago, and I don't think we understood just how severe the ethanol production drop was. It almost was the same as, you're talking COVID level type of a decline. And why did that happen? It wasn't because of supply and demand of ethanol. It's because of the natural gas situation with the Arctic chill that came through the Midwest. A lot of plants either had one of two options. They either didn't have nat gas and they stopped running because they didn't have a power supply, or they sold those natural gas contracts back out into the marketplace to places that needed it, made more money selling that back out into the marketplace than they would have grinding the corn for ethanol. So kind of an interesting thing. That also served a different purpose. And I think that, sometimes Mother Nature can create some interesting things. This translates, look at the stocks level. So we had been seeing ethanol stocks trending near, kind of the highest levels they have been, even despite demand being down, 8% year on year. So stocks were really high, but that decline in production really served to draw stocks down to levels we haven't seen at this time of the year in a long, long time. So kind of interesting. As we get into summer driving season, as we start to see some states trim back their mandates or whatever, their stay-at-home issues or whatever, we see things open back up more often. We also got the timing of that with a sharp drawdown in production in ethanol stocks. So that's been good for ethanol margins. We're actually seeing pretty much a break-even number. I know that sounds, finally break even. It's not real impressive, but that is getting some of that capacity back. We're seeing Cedar Rapids ADM plant bringing back their dry mill capacity in April. At this point, it feels like that's actually going to happen. So, these are good things to kind of ramp up a little bit more corn demand this year. But the ethanol story to me, long term, is it's going to have some headwinds with demand. But short term, I think we could see a little bit of a jolt in gas demand. So I wanted to fit that in somewhere. So I'm going to tie back the last slides. We talked about the world markets, and you can see in these charts, this is world stocks to use ratios for corn, US stocks to use ratios. And yes, this includes China, but there's been just a pretty significant decline really since 2015. And yes, China is the driving force of that, but you can see that's been in the US as well. Current stocks to use projections in corn are one of the tightest we've seen in some time. It's not necessarily 2011 and 12 type tightness. We still have the ability to ship more corn if we needed to. Our carryouts aren't that tight, but we are seeing a pretty significant shift year on year. Soybeans, same thing. Soybean carryout to use ratio has plummeted the last 2 years. That's not a China story. That's been some issues with the U.S. crop last year, primarily, and some uncertainty with the U.S. With South America. But look at the change in 2018's carryout to use ratio was record large to where we are this year at record tight in 2 years. And last year we had some production problems in that 2019 crop. And that was a situation where we had so much excess it could tolerate almost any bad crop thrown at it. But the last year, as the trade war ended, as we saw an export pace pick up significantly, we saw a little bit smaller crop in the U.S., drives everything down to something drastic in a matter of 2 years. So there's kind of your setting the stage story for this. So the USDA, I talked about at the very beginning, in May, they give us their first look at the new crop supply and demand, but they give us a little bit of a nugget in February, and that's this February Outlook Forum. And that's what we're kind of referencing in these slides here. So again, we're starting with the soybeans in the upper left. 2 years ago, we had a 900 million bushel carryout, the largest we've seen in modern history. This year's projection of 120 million bushels fits here. USDA's Ag Forum, again, this is not an official number, it's just kind of what they're thinking about at this time, showed a 90 million acre planted number. On corn, went from a 2.2 billion bushel crop in that 18-19 balance sheet to 1.5 billion this year. They're plugging in 92 million at this point. Now, a lot of debate on that. To me, both those numbers might be low, but this is what we've got for a starting point. Regardless, take a look at how this works. 90 million bean acres, trendline bean yield, with the combination of 7 million more bean acres, we still don't get to 150 million bushel carryout for next year. So not only do we have an old crop story where we've got 120 million bushels, the tightest supply and demand story we've ever seen in the US this year, next year, even with 7 million more acres, we're still not at anything remotely close to a comfortable level of stocks. Comfortable level of stocks would be somewhere in 300 to 350, 400 million bushels. This isn't even close to that. Cannot tolerate any problem. Need to buy in some acres. It's still a big problem. And you can see, my numbers, the numbers I'm using, even probably still show that even 150 million bushels. But shifting gears to the corn side, on the USDA's estimate, they showed 92 million. They showed a pretty beefy yield. I thought that was a little bit even above trend, but they're talking about unchanged stocks. To me, the 1.5 billion bushel corn stocks isn't in chaos mode. 120, 150 million bean stocks is pretty much chaos mode. But anyway, you can see both these crops have relatively tight, if not very tight, looks for their new crop situation. My balance sheet I'm working on in corn is a little bit heavier. I think they're vastly overstating demand. We'll see what they issue in May. Regardless, this is what we're talking about. A need for acres, clear need for soybean acres. I mean, to the point of almost, there's not an option type of a situation there. Not getting that amount of acres and possibly not getting 91 and 92 million bean acres could result in a need to ration some demand in that new crop balance sheet.
Matt, fair to say that if we're going to see that kind of an increase in soybean acres, we're talking acres probably switching again more the Dakotas. We're not talking central corn belt. Iowa is not going to go 10% stronger on bean acres, 20% stronger on bean acres. It'll be more in the fringe of the belt.
That would be my guess. The wheat belt, the kind of the Dakotas through Kansas, probably an area where you could see some additional beans this year. Delta would be another area. Iowa, everybody I talk to in this state, I mean, and I could be, you guys would know more than I would, but it sure feels like it's two things. It's rotational. And I think that the corn on corn yields last year were struggled so much that I think that there's going to be probably a shift back to beans this year, just naturally from that.
Yeah, talking with our agronomy department salespeople, there's a slight move towards some new bean acres this year, maybe a little less corn on corn in our trade territory this year to be seen. But largely, I would agree, we're pretty locked in here in Northwest Iowa to the rotation that we're on. There's just not a lot of acres that move back and forth. So, and it was a great fall fertilizer season with the change in the weather that we've enjoyed here in this last week and getting rid of all the snow and people are getting excited about field work starting sooner as opposed to later, I think. So.
Yeah. I tend to agree with all those comments. It's just going to be an interesting. It's going to be an interesting year because despite that, and then what we talk about with if you're a grower and you're kind of faced with a kind of a key decision this year, the market's got to do some of the work for us. So this is the market doing the work for us chart. This is just looking at new crop corn, new crop beans back to 2000. I call it the profitability matrix. If it's just a difference of corn profitability and soybean profitability. So in the green charts, it generally is going to favor a corn profit situation, or the acres will be pulled into corn. In the pink or purple, it's going to be the opposite. I mean, more of a bean draw. Well, look at where we are this year. It's just right smack dab right in the middle. So real challenging to say that the market has done a lot of work to really lobby for one or the other. And it's interesting though. I think this is always, as you saw what took place in 2005, I mean, we knew a mission of the market was to get acres. We had 500 million bushels of new demand coming online. Prices do an efficient job most of the time of getting what they need. And that's what they needed then. Right now, to me, the market's a little inefficient. We're not seeing that clear economic move into beans. Now, this is a soybean profit. This is basically that last chart applied to only this year. This is 2021. So when you see that, I mean, we're neck and neck. I mean, there's no real incentive one way or another. My bias on normal traditional corn belt ground is that the U.S. farmer wants to plant corn more than they want to plant beans. However, the rotations do a lot of the discussion for that. But these kind of profitability lines are just so close. I just don't think that the markets are giving us a strong enough signal on which direction things should go. So takeaway from the last few slides is that you kind of need some corn acres, but you really need some bean acres, and the market's not really trading a really need some bean acres price right now. Okay, some weather stuff. This is where I kind of I'm definitely not anything close to an expert in weather. I've got some observations I want to make, but I'm going to give a shout out to Commodity Weather Group. The Joel and his team, we've had them present at some of our events, and I just think they do the best job of keeping an objective approach. I don't ever detect they're trying to sell me anything. I think they're not sensational is on their forecasts, and I think that's a big nod. That's a competitive industry that you can kind of get some, hey, corn's going to $12, give me $500 and I'll give you my newsletter for that. But I think they do a good job. And this is what they're looking for the planting conditions this year. So temps, precip, temps on top, precips on bottom. This is April, May. If I'm looking at that and I'm just being objective on my thought process, this looks like it's not an ideal planting conditions for the Eastern Belt and possibly the Southeast and even possibly into North Dakota. So, April is probably the month we would look at the most when it comes to planting, but know that Eastern Belt is fairly saturated right now. I think that this looks like, to me, the wet areas are going to probably stay a little bit wetter. The dry areas are probably going to stay a little drier. The driest areas that'll stay dry in this area are going to be Western Iowa, unfortunately. Frankly, that's probably the one area we see some drought popping up this year. April looks a little bit dry as well. May, however, looks pretty normal on the temperature side. It does look like above normal precip. So this is a blessing and a curse. As we know, May showers are a blessing and a curse situation. We don't want the planting delays. There's a pretty high correlation to a delayed plant leading to a subtrend yield, but we obviously will take any moisture we can get as we get into that growing season. So long story short, I don't look at this and think this is ideal for a planting perspective. I apologize for the fuzziness of these two charts, but this is the growing season map from CWG. If I'm looking at this, while I don't look at much for, I don't look at an optimal planting season. I think it may not be optimal, but it's not showing many threats. This looks like an average precip pattern. There's a swath through kind of at southwestern Minnesota into southeastern Iowa that looks a little bit below normal, but by and large, this is a normal precip pattern. It's a normal temperature pattern. It looks a little bit warmer as you go to the southwest. CWG put this in yield terms. They said this is probably not this isn't necessarily a record trend line, a record crop type of a scenario. They think this is probably closer to a trend line crop, maybe slightly below trend is kind of where they're putting things based on their outlook for the summer growing season. Summer growing season is always, to me, it's a challenge. There's so many components to it. We talked about it in the second part about how, to me, the strongest correlations to yields are threefold. One, planting pace is a critical thing. Second is temperatures during the month of July. You get cool temps in July, you're almost always going to have some of your best crops you're going to see. Third is just-in-time precip. We talked about how that affected that South American crop. We talked about how, to me, subsoil moisture is important, but just-in-time precip thwarts the lack of subsoil almost any time. So that's where it all comes down to, is the timing of the shower potential. That's why the seasonal outlooks are great, but you still have to kind of monitor that on a daily basis as we get into that growing season. I'm going to just talk quick about this. The next two slides are my careful of buying into weather hype presentation. Okay. And I'm not trying to poo poo anything out there, but I do want you to I think these slides put some things in perspective. What I've got is drought monitor for the Midwest I've got 6 years this year and then 5 others. And I think it's interesting to look at what happened during some of those years. 2011 was pretty much a disaster of a crop, but it started out almost the best conditions you could have seen. No drought showing up really anywhere in the Corn Belt. 2012, worst crop we've had in decades. That had a start to some dryness in northwest part of the Corn Belt, but the rest of the belt was totally fine. 2014 and 2004 were our best 2 crops in history. And you can see the kind of winter droughts that were kind of going through parts of that western belt as well. And 2009 was another record crop. And you see kind of the signs of early drought there. Where I'm going with this is there's not a lot of correlation to winter droughts and summer yields. And in fact, some of our best crops ever have had dry winters. In fact, there's that old adage of plant in the dust and the midst will bust. I'm not at all in any way, shape, or form suggesting we're going to have a record yield this year. I am suggesting that we have just as much potential for a record as we do a record bad crop. At this point, winter drought is something you monitor, but it's not something that's a driving point in the market right now. The other thing I want to talk about is El versus La Niñas. And if there's a chart that you could take away and just say, okay, take what I know about El and La Nina and kind of throw it in the waste bin, this might be one of those charts. This shows intensity of El Nino to the right of the axis and La Nina to the left. Percent of trend corn yields are shown along the vertical axis. Now, if I took out 2012 right here, if I took that out, this would be a flat line. Leaving it in, it still is a pretty darn flat line. There's almost no correlation. If you look at what we would say historically, we suggest that a slight El Nino pattern is the most conducive to a better than trend yield. That's what we generally would say. I'd say that conventional wisdom can be taken and thrown out the window as well. That's been almost your best case for some of the worst crops. It's been a little bit of everything. This year, we're projected to be in a moderate La Nina phase. I'm not at all suggesting, again, where we're falling on the line of trends. What I am saying is that this El and La Nina phases historically has had very little correlation to yield. So again, my last 2 slides are take a lot of that conventional wisdom on weather and maybe just, if it does nothing more than just give you pause of maybe this is a little overblown or it isn't, it's a headline more than it is a reality. That's kind of where I want to leave that discussion. And that wraps up this kind of looking forward section.